All right, people. We're going live. Everything is up and running. There we go. Welcome. Good morning, traders and investors. Welcome to another pre-market live stream of Wealth Done with me, Norbert Menhardt, where we build and protect wealth. And we're going to go over a couple of great setup for today. So we're going to do a market recap. We are on the Monday edition. We have, let me just turn this down because somebody's yelling in my ear. There we go. Somebody was me. So we're going to do a market recap. Today's events that are going to move the markets, a couple of big market movers, and then we're going to go over our watch list for options and stock plays. So trades for stocks or option plays. Okay, so let's jump into stock market because it had a beautiful Friday with only Nvidia pulling back there and Eli Lilly, but it was too late. If you saw my weekend edition where I went over my stock trades, if you didn't check it out, subscribe and like the channel. Then you already know what I did with Eli Lilly. Well, let's just go over what happened last week. Let's go over the major indices. So we had a brilliant week. Starting with the 24th, we just had 1, 2, 3, 4, and then we ended kind of on a negative move. Actually, this is today, 1st of December. So we have we had 4 days because we also had Thanksgiving where the market was closed. So we had beautiful week last week. We finished on Friday because nobody was in the markets, or at least half of the US stock markets were opened. So nothing major happened then. But today we are opening red, and we're opening massively red. And check this out. This is really interesting. We are currently moving downwards. Look at this. Lower highs. Will we have lower lows? Well, we just don't know. But I already told you last week, if you were following along, that this is my beautiful drawing from last week. Just take a look at this. Professional drawing where I predicted that it can go down and then up and then down again, or it could just go down. So yeah, let's take a look at the QQQs or the NASDAQ. We also have a pullback on the NASDAQ. Obviously, the NASDAQ will lead with the tech-heavy sector. It will leave the markets. Now, it kind of is having this candle that wants to point that as soon as the market opens, it's going to go upwards because the candle just almost hit the red line here, which is the 20-day moving average, kind of bounced off of it. But I want the market, the US market want that to be open, and I want that to give me the clear signal that is good to go. Now let's take a look at the Spider Dow Jones Industrial Moving Average, which not moving average, but the indices of the Dow Jones, which are currently pointing downwards. So a red day for them, or a red opening, and the same thing for the Russell. Now we know that the Fed Chair Powell is going to have a discussion later on in the day, and we're going to see what the market wants to see, that they are going to be rate cuts. So what he's going to talk about is that quantitative easing is coming to an end, and that rate cuts will follow. So that's what we want to know. The DAX was just massacred today. Take a look at the DAX. Almost hitting its 200-day moving average down here. Pure blood on the DAX. So we could see the same thing in the S&P 500. Now the WIX ticked up just a tinge. Pre-market, it's at 10%. So look for the WIX. It does have a lot of resistance above it. It has three major resistance lines above it. So it could just shoot through it and then come back down again. But we could see a green day in the VIX. It's not that good for the stock market, but it's pretty good for the dollar. The dollar should go up today, although is pretty much down in the pre-market, but it should go actually up today with the red day in the stock market. Now, oil, go ahead and take a look at oil, is looking pretty good. It hit its head at the 200-day moving average. Actually, it's the 20-day moving average. Everything is reversed in oil. Still, it's having its major downturn here after it's peaked in 2022, and since then it's just coming down, obviously, because oil at 100, what is the peak? 130 almost oil. That is just not sustainable. That is why we're having a massive years of correction now in oil. Will it hit the bottom? Where is the bottom? I believe this down here in the 50th range. That is why I'm bullish on oil in the long term. Let's move on to gold. Gold, exactly as predicted by me, has hit its 20-day moving average. It bounced back from it. It's now going upwards, but it's unusually strong rally here in gold, which I would say it's pretty much ready for a pullback. So that gives me a trade idea on gold. Now let's take a look at silver, which just ripped. Silver ripped. Now it will be interesting if silver opens up here. Oh, I have even larger possible. So if silver, wait, here was the bottom. This is a Fibonacci extension. If silver will open today and also close above the 227 Fibonacci extension, then we are good to go with silver to the next level, which I don't even have here, which we just don't know. Silver could go even higher. Now copper doing the same thing, copper going higher. This is due to simply to the AI extension. We're going to need a lot of copper wire. We're going to need a lot of infrastructure build out, and it's not even overbought. So I'm pretty much bullish on copper right there. Euro to the dollar, obviously euro up, dollar down because of this massive move down in the dollar. But I think this is a perfect buying opportunity now for the dollar. If you want to do a dollar trade, there's an opportunity right there. Dollar currently hitting that. Which one is this? Wait, it's the 100-day moving average. So perfect opportunity here to add for some long shares for the dollar at some long term. Now let's just go to Bitcoin. So take a look at this beautiful drawing that I created. Exactly as predicted. Now let's see how this opens, because that's a massive red candle. Could it have 2 more days of red candles? Yes, it could. And then we should see a bounce back. Now, if it does not go lower than this, as I predicted, don't just jump in, sell the house and jump into Bitcoin, because it could retrace and retest its lower lows here. Now it's currently putting in a higher low, and if this holds, then we are going to see the next leg up in Bitcoin. It's going to be choppy, but Bitcoin is good to go here, as same as Ethereum. Again, down in this beautiful support zone. I'm bullish. I'm bullish on both of them. So let's go to a couple of stocks on my watch list. Now we're going to go over the Magnificent 7 and also add a couple of them in there. Just take a look at the NVIDIA. Beautiful setup here for NVIDIA. NVIDIA currently having a nice little correction. It's going to open this yellow line here, orange, yellow. I have to change the lines. More of it. I'm going to make it purple. So the yellow line here is showing us clearly that NVIDIA is going to open up even lower today on opening bell. Now, this is pretty good for me because I'm selling calls against NVIDIA, so that's good for me. Sadly, for those of you who own NVIDIA and are panicking, I'm going to actually tell you the good news: do not panic. Just relax. And if you have some cash on the sides, on the 200-day moving average, or even between these. Oh, sorry about that. Obviously, in the live stream, somebody has to call. We have a beautiful retracement here in NVIDIA, and we are just going to add some long-term shares here. This is such a beautiful setup for NVIDIA. Come on. Even if it goes lower, I'm actually expecting it to come down here in the maximum support level. If it comes down to, so one major support is between the $150 and the $130 a share. The next major line of support is the $115 and $90 per share. I do not think that NVIDIA will even go near the $130 per share. But at 150, underneath its 200 moving average, Mwah, beautiful setup there for NVIDIA. Okay, next up, let's take a look at the options chain here. What do we find on NVDA? Let's see what we find here. I'm going to go on up for the weekend edition then. NVDA today, let's see. So these are not the current prices. This still needs to open. So we know that NVIDIA is currently at 173. 173. So it's down here somewhere, meaning this is going to move even lower. Let me just clear this up. Meaning that this is going to go even lower, meaning that these options are going to become really juicy. So will it hit a 1 standard deviation for this week, or would it? This is the last week. We're going to just forget the last week. But I could see here, let's see, 160, I'm looking for an 80. It still needs to open. So anything that you're going to see opening up with 173 is going to go even lower. So 170, so that divided by 2 would be in the 80-ish, 85-ish range. Everything that you're going to see, also this right here, getting 94 in the middle, yeah, for risking 4,000 or putting up 4,000. While that's not good enough of a trade, but it looks pretty juicy to me. Let's go on the monthlies. I only have 18 days. That means it's kind of half of a month, maybe a little bit more. Sitting here somewhere. We're sitting actually here. So we're going to move this down, and this is going to move how many ticks down? So we're sitting here 3 ticks down. So 3 ticks down would be here. So this is going to, at 156, would be a perfect place to sell some naked puts. Getting assigned, once again, through the diagram here, getting assigned NVIDIA shares at 150. Come on. If that's not good for NVIDIA, then I don't know what to tell you. Now, NVIDIA is not yet oversold. It still has some room to go until NVIDIA is going to get, well, wait, this is not NVIDIA, this is Meta. Check out my video on Meta. That was a great video. It's going to come out later on this day. I did a deep dive into Meta, where to buy Meta, what I'm expecting for the Meta stock. So 160, right here between these twos, right here, I would love to have some long-term NVIDIA shares. Okay, so let's move on to Apple. Apple just grinding along here. Currently above its 161 Fibonacci extension. If Apple pulls back once again to its 20-day moving average, I think we are once again setting ourselves up for the next leg up. So I could see Apple doing again this and again this until going to hit its 261 Fibonacci extension. Why do I believe this? Because they're still not out with the AI play. And when they are going to come out with the AI play, I think Apple is going to rip. Also, don't forget that each time you buy an ETF, most of the ETFs have Apple in there. Also NVIDIA. So each time somebody buys an ETF, they're adding to the NVIDIA shares. That ETF needs to buy if it is a replicating ETF, not a synthetic ETF. If it's a replicating ETF, it needs to go in the market and buy the amount of shares relative to how what kind of weighting it has in its ETF portfolio. Let's move on to the next one, which is Google. Google finally having a little bit of a pullback here. Now I'm expecting for Google to come down to the 200-day, to the 20-day moving average is currently sitting at 293. This is going to go upwards. So I think that somewhere around 300-ish, between 300 and 280, which is currently up underneath the 200-day moving average, the 20-day moving average, damn it, is where Google is going to find its footings. So I would like to see Google come down here in this range and then do its next leg up, because Google is perfectly set up for a beautiful long term. So let's just take a look at here. Let me add the Fibonacci extension, the 161 and the 127. This one. Okay, so Google still has 161 to reach. And I also think it's going to reach the 200 something. It's going to double from here. This is what I think. Is this going to happen tomorrow? No. It's going to go down first of all. It's going to have then a massive correction when the rotation in NVIDIA is going to take place once again. They are only TPU processes heavy. Somebody's going to say TPU is out and full processing is back in again. NVIDIA is going to rip. Google is going to tank a bit. And then we're going to go back to the same thing, which also is going to pull back up the next stock that we're going to talk about. Check it out. Check it out. Exactly as predicted, it has come down into its support range, which was the previous highs, and bounced away from it. And that is Microsoft. Microsoft suffering on the same thing as NVIDIA, that the CPUs are gone, ChatGPT is gone, GPU, sorry about that. Graphic processor units, the racks are dead in the water, dead fish in the water. Only the TPU processors are in vogue right now. So, meaning Google is going to win, Broadcom, AVGO is going to win, and everybody else is dead. I don't think so. Microsoft at these levels, I did not add to Microsoft. So, admit, sadly, this is the moment. I actually expected this to come down even further, but its previous highs just demonstrated that, well, that was where I should have added to them. This is all not said and done. As I said, we are still expecting the market to do its thingies here, then go even higher into the Santa Claus rally. But coming up next here, still think we're going to see a nice little correction in each and every stock. Going to retest these levels. So don't just think that this is over. This support range will be retested. Okay. Now let's move on to my dear friend here, Eli Lilly, which is having its second red day. But it was just too much for me. So is this the time to buy Eli Lilly? I wouldn't say so. But Eli Lilly will not correct down as much as you think. It will not reach these lows. I don't think it's going to reach even the 950 levels. I think it's going to come down to 1,000, bounce around a bit there, and it's going to have another leg up. Eli Lilly, beautiful support here. It has a lot of stuff to go for itself. Even, just take a look here. Just take a look at this beautiful support zone. So it, first of all, has to destroy all of its moving averages, the 20, the 50, the 100-day, the 200-day moving average. And even that, it still has its previous highs to go lower. Now, I think that's going to find its footing somewhere in this range. As I said, between 1,000 and the 900s, but I don't think it's going to go deeper than that in its correction. Is it going to have a correction? Of course, it's going to have a correction. Now let's move on to Amazon, one of my favorite stocks here, because Amazon did not have its leg up yet. And I predict that this is the next one. Amazon is currently looking beautifully here. Now, if you want to sell a couple of puts down here at the 200-day moving average, which was tested and fails, or underneath the 200-day moving average, let's just take a look what we get at AMZN. And let's go to CN, missing an N there. And let's go to its 18 days here at, what do we have here? There at, let's just see, again, Meta. Again, Meta just wants to talk to me. 218 was the 200-day moving average. So let's see, what do we have here? At, let's take a look at how deep it is in the Bollinger Band. AMZN. AMZN. Oh, there we go. Inside of the Bollinger Band and outside of the cloud. So this also MACD is trying to trigger here buy signal. This is going to rip. This is a perfect moment to add to Amazon. I'm telling you, you're not going to regret this. Let's just take a look at the 18 days expiration, the 19th of December. Let's see, 200. Oh yeah, take a look at this. 220, 200, and 217.5 strikes looking so juicy. So juicy. I know that it just came down, says 231. Basically, this is down here after, after the 232 ticker. So this is basically moved down just a bit. We're going to get here juicy $160, even more. I predict $180 for putting up 3,000 something dollars in buying power in just 18 days. Now you could hit this even earlier. Take a look. Currently, it has 83% of probability of profit. But that profit could be just 1 cent. Okay, but that's a profit. But I think this is setting itself up for a great trade. Being assigned shares at 200-ish, I wouldn't mind it for Amazon. For a long term, perfect. So let's move on to the next one, because we're not done. Tesla. Take a look at our little pharaoh. I lost so much money on Tesla in the last couple of trades, but I think Tesla still has its future in front of it. With it had with the market its correction, okay? And now Tesla is just setting itself up for the next leg up. So selling some, you have to be careful here with Tesla, okay? Somebody does something, and that somebody, you know his name, tweets something or X's something. What's the post name on X? X is something, it kills something. It writes something on X, then this could go to the 200-day moving average at 362. I don't want to be assigned shares of Tesla. I don't know what this guy is going to do. If he's going to say something dumb and then the stock goes down, or if he's going to say something smart because he's a really smart fellow, more smart than I am, and the stock is going to go up. I don't know. So I wouldn't sell on this stock any kind of strangles, but it's a pretty good setup for a naked put. And then if you're assigned some shares, go ahead and write some calls on it. At the 362 levels, let's see what we got here on the monthly. SLA in 18 days. If we're getting the level 362. 362. So this is going to come down, and 362 is way down here. This is looking perfect. 362.5. Now, going naked, you need $10,000 in buying power. But hey, you could also do something like this. You're going to only take up $472, but only $28. Well, that's not good for me. So let's go up here. No, actually one more down, because this is going to go down after the market opens. Getting 50, putting up 450. That's over 10% in 18 days, not trading days, but 18 days. Maybe that's not so bad. You can sell, let's crank this up. You can sell even 3 of this. Let's go to 2,000. There we go, 2,000, putting up $2,250, getting back 10%, $250. Ooh, this is an interesting trade. You would need to sell. So your max loss is $2,250, but 10% is your max gain. Everything is capped now. Selling a put and selling a put and buying a put. I think this is a perfect trade set up here for Tesla, even if we are above the 200-day moving average. But it's still down here, 395. Yeah, that's perfect. You're underneath the 100-day moving average, above the 200, so exactly here in the Bollinger Band. Perfect trade setup for Tesla right now. Okay, let's move on. What else do we have interesting here? Intel. This is frustrating. Intel just had such an explosive day on Friday. Now it's giving back like 15%, 20% from that. I wouldn't touch Intel here, but I want to mention that this is one of the biggest movers out there. I wouldn't touch Intel here. It's not overbought. Could go higher. Could turn into a bullish flag. If it comes down and then next leg up. Maybe good setup for a trade, but I was so afraid from Intel. Moving into Micron Technologies, beautiful setup here. So what I would do, if I were you, for 1 year. Okay, so here's the setup. Clearly, we're going to hit the 20-day moving average today. Clearly, it has had a resistance at the 200-day moving average without any kind of new news coming out. I would be watching this 20-day and then 50-day. The 50-day moving average, 206. Let's go to a 206 naked put. Let's see what we find there, or maybe a diagonal. So MU is the ticker symbol for Micron Technologies. Creating those chips. 206. Let's see what we find in 18 days. Be careful, because they do have. Go back here. First of all, be very careful. They will have their earnings on the 17th of December. Selling a monthly, which closes on the 19th. So this means that this is Wednesday. Yeah, of course, it says right there. They're going to have their earnings on Wednesday, which also means that there are, look at this, the RV rank is going to climb up. IV rank is going to go up the next couple of days. So this week, I expect IV rank to climb. I would wait on Micron Technology to reach a over 70, 80, maybe even 90 IV, and then sell a naked put. Really, sell a naked put on this. It is not going to reach that 50-day moving average, but be careful. You could get assigned if it's going to reach it. So you really have to want to have then Micron Technologies in your portfolio. Getting a sign at that level wouldn't be the end of the world, because you then can sell calls, and the calls are beautifully set up here. Just take a look at this call. Let's just sell at 1 standard deviation, 1 month, 1 standard deviation. You could get $470 in 18 days if you would now own Micron Technologies, and the stock would not reach the strike price of $277. But wait for it, okay? You could also wait after the earnings. They do announce earnings after the bell. You could also play a strangle on this. But if you play a strangle, go outside 2 standard deviations at 320. And let's see, where do we have the next one? At 152. This is going to cost you 2,321. Currently, dollars buying power, you would get 183, but it has a 96 probability chance of success. So wait the IV rank to just go up there, sell then the strangle. The IV rank is going to be crushed at earnings, is going to go in one direction or another, and then you could just sell both of the tails. Okay, don't leg out of it. Okay, don't do heroic stuff. So that's pretty much it for a trade setups for today. Let me hear what you think. Do you have any what you think of my trade setups? Let me hear if you have any kind of trades that you would like me to take a look at. With this being said, I'm Norbert Menhardt. This was the Before the Bell edition of Wealth Down. I build and protect wealth right here. So like and subscribe. Catch you next time. Check out my weekend edition, where I went over my trades from the last week, and also check out the Meta buy, sell, or hold video that I'm going to release later on today. With this being said, take